Gerald sat frozen, staring at his account summary. $40,000 missing. Not from a con artist. Not from a risky financial move. Gerald was a cautious retiree who had followed every rule. Yet over 3 years, 9 invisible forces had silently hollowed out his retirement savings. My name is Daniel Hartwell. Today I'm walking you through precisely how Gerald hemorrhaged that money and, even more critically, how you can shut it down before your next billing period arrives. Because the very last issue on this list alone drains the typical senior over $8,000 annually, and your personal attorney could be billing you for it at this very moment. If you click away from this video, you will continue funding services that should cost you absolutely nothing. Stay with me until the final second. I'm handing you the specific forms, direct phone numbers, and word-for-word conversation guides to get your money returned. Let us go recover what belongs to you. Gerald's first gut punch arrived on a Wednesday afternoon. He opened his Medicare summary and discovered an unexpected $400 deduction pulled straight from his monthly check. Here is where the system breaks down in plain sight. The government was collecting taxes based on a financial ghost. Officials were referencing his taxable earnings from 2 years prior. But Gerald had stepped away from work the previous year. His actual current income was significantly lower, yet the automated processing system was still measuring him against his former financial picture. He had no idea he could challenge it, so he quietly absorbed the cost. The solution is one straightforward document called Form SSA44. You submit this immediately once your income decreases because of retirement, a divorce settlement, or the passing of your partner. It compels the agency to perform a fresh evaluation grounded entirely in your present circumstances. Once approved, the excess charge is removed going backward, which means you receive a lump sum reimbursement covering every overpayment. That single sheet of paper can recover up to $8,000 annually. Gerald assumed the hard part was finished. He believed his healthcare situation had finally been straightened out, but the following drain was hiding right inside his medicine cabinet. Countless retirees are still paying prescription costs they no longer have any legal obligation to pay. Beginning in 2026, federal legislation capped annual out-of-pocket drug expenses at $2,000, but the software running Gerald's pharmacy was still calculating his charges using outdated rules, collecting $50 co-payments even after he had already surpassed that legal ceiling. He had no awareness that the system was completely failing to track what he had already spent in total. Fixing this requires only one telephone call directed to your pharmacy's billing office. No magic vocabulary is necessary, only one precise legal term: claim adjudication. Simply say, "Please verify that my claim adjudication accurately reflects the 2026 out-of-pocket maximum." If they push back, contact Medicare directly and submit a formal request for a claims reprocessing review. That single conversation recovered $800 for Gerald, but the next financial trap was not in his medicine cabinet at all. It was arriving in his mailbox every season. Gerald looked at his property tax statement in disbelief. $1,900 more than what his neighbour was paying for the identical house on the same street. The reason? Because 68% of counties across the country do not automatically register seniors for homestead exemptions. Instead, they issue a standard bill and count on you being too overwhelmed or too exhausted to push back. In 2026, states broadened these qualification thresholds, which meant Gerald's exemption should have shielded an additional $50,000 of his home's assessed value from taxation. He had naturally assumed the county assessor's office had applied his senior discount without being asked. They had done nothing of the sort. To resolve this, never open with, "Am I eligible?" Front desk employees will hand you stale, inaccurate information. Instead, ask this specific question: has the senior homestead exemption threshold been updated for 2026? And what documents are required to claim the revised exemption? Offices respond differently to precise, informed language because it communicates that you understand the legal framework. That focused question alone saved Gerald $2,000. That represents approximately 6 months' worth of groceries for a typical household. He believed the bleeding had stopped. Then the utility company moved in quietly. Electric and natural gas providers are legally obligated to offer senior assistance programs. These are not acts of charity or goodwill. They are government-mandated discounts of up to 30%, yet companies bury this information inside documents that run 80 pages long and train their customer service representatives to deflect and redirect. Gerald paid the full standard rate for 5 consecutive years because he had absolutely no knowledge that a different tier even existed. When he finally picked up the phone, he did not simply ask for a discount. He stated clearly, "I am requesting enrollment in your federally mandated Senior Assistance Program." The word mandated was intentional. Representatives are trained to escalate calls containing that language immediately because failing to properly enroll eligible seniors triggers internal audit consequences. One word changed everything and saved Gerald $1,440 every single year. 4 drains identified, thousands reclaimed. But what came next left Gerald completely speechless. The most damaging loss had nothing to do with the government. The bank was responsible. Gerald had been quietly absorbing a $25 monthly maintenance charge on his personal checking account for 3 full years. $900 had simply evaporated. Federal guidelines explicitly prohibit financial institutions from billing customers aged 65 and older these maintenance fees. But major banks depend on your inertia and your assumption that the charges are unavoidable. Telephone representatives cannot authorize the permanent elimination of these fees. You must physically enter the branch location, establish direct eye contact with the branch manager, and clearly state, "I am 65 years of age or older. Please reclassify my account to the appropriate no-fee senior product." Carry your government-issued identification. If they decline your request, file a formal complaint through the Consumer Financial Protection Bureau's online portal. Banks consistently resolve those submissions within 72 hours. And those $3 ATM surcharges Gerald had been swallowing each week. He began saving every receipt and submitting a monthly reimbursement request directly to his bank's compliance department. They processed everyone without resistance. Gerald was beginning to feel like he had regained control of his finances. Then his tax software quietly deceived him. 12 states continue taxing Social Security benefits, but 8 of those states quietly raised their income qualification thresholds heading into 2026. Gerald's combined annual income was below $50,000, which meant he legally owed 0 state tax on those benefits. However, his tax preparation software was still operating on the previous year's rules and billed him incorrectly as a result. The solution is to stop using the software altogether for this calculation. Request a Social Security benefit taxability worksheet directly from your state's Department of Revenue and complete it entirely by hand. Then submit an amended tax return based on those corrected figures. That manual worksheet returned $1,200 directly to Gerald's account. He thought every problem had been resolved. He genuinely believed that. Then the next situation nearly dismantled his entire future. Gerald spent 3 weeks recovering in a hospital. During that period of recovery and confusion, he missed a scheduled payment on his long-term care insurance policy. The policy was terminated. He believed his coverage had vanished permanently, with no way to restore it. Insurance agents never volunteer information about alternative options because their commissions are tied to selling new policies, not preserving existing ones. But the law actually requires insurers to present policyholders with a premium stabilization option. Rather than contacting the sales division, Gerald reached out to the policyholder advocacy line directly. He said simply, "I am requesting premium stabilization." The insurer was legally required to provide him with a reduced benefit continuation offer within 10 business days. He maintained his coverage at a dramatically lower cost. He had survived the medical crisis. He had salvaged the insurance. He was certain every problem was finally behind him. Then came the final revelation. The $8,000 mistake. Gerald's estate attorney delivered an invoice for $8,000 to file what he called a protective federal estate tax return. "Just a precaution," the attorney explained. "Here is the reality. The federal estate tax exemption sits at nearly $14 million per individual in 2026. If your total estate falls beneath that ceiling, you owe absolutely nothing. Filing a so-called protective return is entirely unnecessary for 99.7% of retirees across this country. It generates substantial attorney billing without delivering any meaningful legal protection in return." Gerald studied the invoice. He picked up the phone and said clearly, "My estate falls below the 2026 federal exemption threshold. I am declining the protective filing." He saved $8,000 in under 5 seconds. That is a complete roof replacement. That covers your property taxes for an entire decade. Gerald did not lose $40,000 because he was reckless or uninformed about basic finances. He lost it because no one ever sat down and explained how these systems actually operate. He trusted that the county assessor, the bank, the pharmacy, and his own legal representative were genuinely protecting his interests. None of them were. They were simply processing paperwork the way they always had. But you are no longer operating in the dark. You are now fully equipped. Here is your specific mission for the next 72 hours. Tonight, download the 2026 Senior Exemption Resource Guide, linked in the pinned comment below. It contains every relevant URL, form number, and conversation template for every single financial drain we addressed in this video. Tomorrow morning, contact your utility provider and your county property appraiser's office. Use the exact phrasing I provided. Both calls together require about 20 minutes of your time and can generate over $3,000 in annual savings. This week, visit your bank branch in person and submit Form SSA-44 if your income has declined. Do not scatter these steps across weeks or months. Momentum builds on itself. Procrastination quietly erodes the savings you have already earned. Every dollar you recover is a dollar that remains in your household, not sitting in a government processing account or a corporate revenue column. This is not about being frugal, this is about fundamental fairness. Retirement was never meant to be about generating new wealth. It is about protecting and preserving the wealth you already built over a lifetime of work. I am Daniel Hartwell. Guard your financial future, claim every exemption you are legally entitled to, and never again allow silence to drain what rightfully belongs to you. Subscribe right now because next week I'm exposing 5 critical Medicaid traps that can quietly devastate the inheritance you intend to leave behind. You absolutely cannot afford to miss that one. Stay safe, stay alert, and I will see you in the next one.